Yo, what is going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody joining live. Chat is open. Questions, comments, agree, disagree, stocks you want to look at, anything you got, throw it in the chat. Makes this a lot more fun for all of us. Yeah, as we always do, we'll bring down everything that went in the market today and get everybody ready to trade for next week. So without further ado, it's time for the Rapid Review. All right. Oop, wrong slides. What's going on, Liz? How you doing? Appreciate you. Appreciate you joining. All right, so we'll start off how we always do. Let's look at what's going on with the market trend. Actually, hold on. Let me adjust my exposure levels because that adjusted. That should have been back here. All right. Well, now you guys can see what goes on behind the scenes. All right. So exposure level is 40-60%. Market stance is at sideways. Webby trend showing choppy on both. If you don't know what that is, check out Mike Webster's YouTube channel, the Webby 5150. Webby Rambles On. Search either of those and you'll find his 3-day trend is kind of what this is based off of. So you can get an understanding for that. But needless to say, we're choppy there. My 50-day trend, which is a little bit more of a longer term trend, is S&P has triggered uptrend, so switched. It was sideways. We are 1.47% off the all-time highs. The NASDAQ is sideways and 4.98% off all-time highs. And we are now in the 77th day from the initial rally. What do we got going on? Hey, what's going on, Chad? Appreciate you joining live. Kind of weird, choppy. Weird how chips rally today. Okay, we'll look at that. Looks like Rocket Lab bounced from a support area. We'll look at that as well. Again, guys, keep everything coming in there. We'll address everything that you guys talk about right on here. So, all right, let's look at the index performance. So for today, S&P closing in the upper range, Nasdaq closing in the upper range, Dow just in the upper range, and Russell almost at highs. So good closing range. Also, we like to see the opening gap up was pretty good. From the open, we were able to remain green. So we're looking green across the board. For the day, the S&P was up 0.89%. NASDAQ was up 1.29%. Dow was up 0.74%. Russell up 1.53%. Moving average wise, we reclaimed the 21 and the 50 on the S&P, which is good. We'll look at these charts so we can actually see them in the context of what's going on. No changes on the NASDAQ. Reclaimed the 21 on the 50 on the Dow, and the Russell was able to reclaim the 10 and 21. Stand by. I'm just checking my doorbell. All right, just deliveries. Yeah, Coco looks like it wants to trend up again. We'll look at that as well. All right, so let's jump over to the indexes. Let's see what went on today. All right, starting off, we'll do the NASDAQ on the daily. Volume lighter. Volume has been fairly light for a while now. As you can see, we were up for the day. We opened up. Actually, we'll look at this in the 15-minute. Right, we gapped up, climbed a little higher, and basically flattened out towards the end of the day. We're seeing pretty much the same thing on the NASDAQ. Not much else to say. Russell, you just basically climbed throughout the day. So just seeing some intraday action. But in terms of the daily, looks like a little, I wouldn't even say just yet that we're seeing the resistance at the 10 to 21. That's underneath the 50, but, climbing back. Overall, we're seeing it's just been this choppy sideways action. Things tightened up over here, and then we kind of rolled back down. Again, not looking great, but not a complete like, oh my God, this is kind of over. I was looking at this low over here and keeping an eye on that. We ended up closing below it, but now we've got back above it. So overall, if you do kind of look at the swing highs and swing lows, we're still kind of maintaining somewhat of a VCP pattern. I was kind of hoping this was going to be more the swing low, and it looks like this is more flat, and we basically kind of looking like that. So, but we'll see. Really, what we're seeing right now is just more continuation of that choppy sideways action, more volatility. More of the markets that we don't really like to be highly leveraged or have a ton of risk in because it's tough. It's a hard penny market, as Mark Minervini would say. But that doesn't mean that we disregard doing our routines and staying on top of what's going on. So for key levels right now, really, I'm going to take this out right here. What we want to see is we want to really maintain these levels right here. Want to hold that low that we got from last Friday. That would be a very, very positive sign if we can continue to see that we kind of keep those swing highs and swing lows a little higher and just keep seeing volatility decrease. Um, Expecting resistance possibly to continue around this green line right here. If we do break below above that and above the 50, that would be all positive. So really right now we're watching the low for Friday and we're watching this high right over here, or this range in general over here. This trend line has kind of been knocked out now. I'm not really too concerned about that. But those are the two levels that we're really looking at. And we'll see how we interact. On the S&P, the S&P is looking a lot better. The S&P, less of a down-sloping trend to it, more of a sideways action. Still those swing highs and swing lows still looking good in terms of like a VCP or a volatility contraction. If you don't know what that is, Minervini, just looking for those swing highs and the swing lows to get tighter and tighter and tighter as we get like a base kind of formation. And that's a lot of what I'm looking at here is, I'm looking at this as like kind of like a base. We had a big run up and the market's taking a break. And now we just want to know, is this going to base and then continue, or are we going to roll over from here? My gut says this is just going to be continuation to chop. And then eventually we'll kind of continue from here. But again, we don't know. That's just my gut feeling. And I'm not going to trade off of my gut feeling. I'm just going to sit back and let the market tell me what it's going to do. So, what else we got? Question. I know Webby would shake his head if he heard this. I know it's about volume. But would it be crazy idea to include volume and not just RS for themes? Because big shifts on big catalysts can be visible. Elaborate on that a little bit. When you're saying this in terms of what context? I mean, I do look at volume within stocks. I take it with a caveat, and it's not the end all be all for me, but it is something that I pay attention to. And I do not buy something because of volume, but it is a metric that I do consider when I'm looking at the grand scheme of things, and something I look at it with the market as well. Not gonna lie, use today to get out of some positions to hold some cash for a follow through day. Yeah. And here's the thing. So technically we're not looking for a follow through day by IBD or the true CANSLIM style rules. We're not really looking through a follow through day just yet. We haven't entered like a marketing correction or a downtrending status yet. But yeah, we do want to see, some pretty high volume and a good strong move. Like technically, this probably would have ended up triggering like a follow through day type action. But yeah, I mean, I'm looking for follow through day type action for sure. I can agree with that. But I think the real thing right now is getting through this range up here. Like we're seeing a ton of resistance here and reclaiming these moving averages. So if we could start getting up here, and see some strong moves, then things will look a lot better. This is really kind of the ceiling and area I'm looking for. All right. So other than that, distribution day wise, we'll jump back over to the slides. Oh, and I forgot to say this. You guys know this. Educational, informational purposes only. And here, I'll do this just to cover my butt. There you guys go. Read it. You know the deal. I don't even know if I really have to do that technically, but it's just good practice, I guess. Distribution days, still a high count. We're gonna lose this day on today's what, Tuesday, Wednesday, Thursday, and this day on Friday, bring it to 5, bring it to 7. Anything else probably not going to wash out. Maybe if we got an insane rally through the rest of this week, which I doubt, but other than that, fairly high distribution day count. Something to be aware of when we're looking at these days over here. We did start to see some clustering. We've avoided distribution over the last couple of days, which is positive. But still, yeah, something to take note of. All right, let's jump over to Deepvue. For those of you guys who don't know, I'm a Deepvue partner. This is a tool I use for all my stock screening, fundamental analysis, technical analysis. Best tool out there, hands down. Nobody is putting the amount of features the amount of customization and the ability to just do what you need to do as a trader, no matter what your style is, all in one. You know, if you this is there's a lot of platforms that you do the charting well, maybe they do the fundamentals well, maybe do they are doing everything very, very well, and this is what I use. We'll go to my sector tracker dashboard, which is another feature that I love. Gives me the ability to just customize my own view. Just to give you guys a quick idea what it does, you get a blank slate and you can add all these things and build anything you want, all sorts of cool little interfaces for yourself. So if you want to check it out, in the description I have a free month trial. Then I have a 12% off code for annual, so you can check it out on for an annual membership and get a really good deal. But yeah, use my link and I would appreciate it. All right, sectors daily. Tech showed a lot of strength today. Tech was the leader. um we did close below the 50, which is not great, but we kind of shook out below this low over here, and now we're rallying back up. Doesn't look great, but it doesn't look like it's completely out of here and collapsed. It's still an area we're going to watch. And I think for most of us growth stock traders, this tends to be the group that a lot of those, growth stocks come from, because in the world that we live in, tech is driving a lot of stuff. So, um, very similar to the market, but not somewhere I'm looking to really trade in right now in the short term. Energy is looking like it's trying to come back. It's actually, if you look at it on the weekly, and I mentioned this yesterday in my write up, it's kind of forming like a double bottom style type of base, especially when you look at things in the weekly. Um, I'm not saying we're out of the woods yet, right? Just like any double bottom, like we could have just this could just be like a dead cat bounce, and we could roll back below the 50, or this could be a double bottom base that we turn around and break out and see this start to trend. So, um, not something I'm looking to really trade yet, but just keeping an eye on energy. Healthcare looking good still. Today was actually a pretty good kind of, again, trying to get below that 21 on the open, and then we rallied back up, found a little bit of a line in the sand. So, really keeping an eye on all things over here. But yeah, I mean, it broke out and it squatted back in after a really strong run up. Nothing really wrong here. Healthcare is still an area that I'm really, really highly watching and is on the top of my watch list. All right, back to some of your comments. Like you, I don't avoid buying something because of low volume. What I meant is more, if you view industry groups by RS, by the time they're showing real strength, a big move has already happened. So maybe also looking at the relative volume. Last group is okay. This is actually a perfect thing, and I'm glad you brought this up. When you're talking about trends, right? And I'll bring up, when we go into the industry groups, I'll bring up my dashboard that I built, which is like my way of tracking industries. You got to think about things in the context of the market, and you got to think about things in the context of the rotation or the trend of how things are acting, right? And you're going to have long-term leaders, which especially for your traditional position trader, traditional CANSLIM trader, that's where you really want to focus. You want to see that long term. I'm not what those traders are not going to be worried about. Oh, we're seeing a little bit of strength in this group. They want to see, especially coming out of a correction, which is where it works the best and where it's the easiest and the clearest to see. When everything's getting damaged, what's not, what's standing up against the market, what's showing the most relative strength, becomes very easy, like we just had, to see things like memory showing so much strength while the market was getting crushed. And then it was very, very in our faces that there was a good probability of that memory group leading, AI leading into this rally that we've had. Now, when you start getting in markets like this, when things are choppy, this is where it starts to go, well, are these groups just taking a break in the short term? And now we're seeing this rotation into this money, but that trend of like the healthcare, the financial stuff is not going to last. And then we'll see the rotation back into tech and things like that as it takes a break bases and then reforms. Possible. Or are we seeing a rotation into new leadership? And a lot of this comes down to your trading style. If you are somebody that is a more pure CANSLIM trader, it's something to be aware of and you want to be on top of it. But a lot of the trend that you're trading is a much longer term than somebody who's maybe more of a swing trader. They're going to be a lot more focused on what's showing relative strength in those shorter time frames. Now, part of the way I built my dashboard is to kind of show things starting to climb the rankings and show things that are maybe starting to turn around. But in terms of the sectors, and this is something that is financial sector really, really showed, right? It showed that it was starting to change the trend. And if you know Stan Weinstein, his stage two uptrend, that this helps a lot with your trend analysis. And that's what we're looking for. Like, I don't need to catch the bottom. And I think this is what there's a lot of pieces to this, and I could probably do a 3-hour talk about this, but I don't care that I didn't catch here, right? I don't worry about trying to see, oh, look, it's starting to show some strength when it's below the 200 and it's still got all this upside resistance. I want to be in the trend. If this trend is going to last, a big institution to keep buying, this is I'm here, I'm fine. Right. That's why the follow through day. We're not looking to buy as with markets bottom, we're looking to buy as the market starts to emerge. And it's the same thing with sectors, and it's the same thing with industry groups, right? So we started to see things start to emerge here. So this could have been the first kind of light to say, oh, okay, like financials are starting to show strength. And I'll be honest, I wasn't really too keen and too closely looking at financials until really about here, where we kind of came up, pulled back, we saw some really tight action. And on one of the rapid reviews, I mentioned this looks really constructive, like it wants to, bounce really high, and that's what happened. And as it started to bounce, like this would have been probably a good day to get into a lot of financial stuff. So it's like you don't have to buy here and try to bottom pick. The same we don't have to bottom pick a stock, same way you don't want to bottom pick the market. It's all the same across the board. We're looking forward to see that we're getting into a trend, and then we want to see things start to base and tighten. And then as they start to break and emerge, that's what we're looking to get in on. So there's a lot of ways to do that. There's a lot of methods that people use, whether it's the ranking system, whether it's relative strength, whether it's just pure technical analysis of ETFs. There's so many ways to go about it. You got to figure out what works for you and what helps you based on how you trade, and also do this all within the context of your trading style, which is a big piece of it. So keep that all in mind. Yeah, I meant more like very real rotation into cybersecurity, which was very strong. Not talking about junk funds rotating into. So here's the thing, right? Cybersecurity is very clear now, right? Very clear now. So if we were to go into, was it bug? Right, this is one. Cybersecurity is so clear now. Here it wasn't, right? Look how this trend. It wasn't very clear here. It was starting to get pretty clear here that there was some strength. And then it was starting to get toward it broke to these all-time highs. And then it pulled back and it based. And this is where I was starting to focus on cybersecurity, because what was happening was, well, the market was behaving crazy choppy and everything was getting really sloppy. Right around here, you could see this relative strength line starting to build as this is trading very, very tightly. And this is, again, another way you could be looking at some of these groups. You could be looking at the stocks. If you looked at a lot of the stocks within this group, right? If you click here, another great feature of Deepvue, right? If you went through a lot of these names around here, a lot of these were showing a very, very similar pattern. And when they broke from here, and this is why I like trading this style, especially as we're already confirmed in an uptrend, not coming out of downtrend. And coming out of downtrend, I buy more breakouts, but coming after we've had a couple months of a rally, I like buying the tightness on these relative strength names, and that's what got me into crowd. So, yeah, what I'm saying is that they're the volume side of things. I look at the market, I look at sectors, I look at industry groups, I look at everything in the context of the trend. I'm not trying to buy it as it's bottoming. I want to buy as we're confirming an uptrend. And that same way as stocks going to base, the same way as sectors going to base, the same way the market's going to tighten up and follow through is the same thing I'm looking for across all these areas. Very, very simple. So again, like financials right around here was where I'm like, all right, financials is in play right now, because I see we've confirmed the uptrend. We're above the 200. We've tightened up and we've made a significant strong move. Look, there's volume here. There was relative strength. There was a lot of stuff in this move. So that's, again, that's always going to be the difficult thing with industry groups with rotation, is trying to see, you don't want to get in too early, but you also don't want to get in too late. And the way I think that the best way to do that is you want to see some relative strength, you want to see a trend change, and then you want to see because what'll normally happen is you'll get, this is a lot of times what will happen. Like, it's not going to just skyrocket off. as it's coming out of a basing pattern, as it's turning around, you're going to get sellers in here that tighten things up or that pull things back and give handles or give wedge pops or whatever you want to call them. And those are the areas that I'm looking to really see, like, hey, can we get some confirmation as we're starting to get higher highs, higher lows, above moving averages, trending upwards, all those different things contributing to what I'm looking at in the trend. And then once the trend looks like it's being confirmed, I'm ready to go. But again, the key, and I know I'm rambling as I always do, ranting, rambling. I don't want to take Webby's rambling, but the key is being aware of it. I'm not finding this out over here. I'm seeing the constructive action as I'm looking at these sectors every day and saying, if this makes this move, that's constructive. That's really good. If it breaks down, okay, that's the other direction. So that's why I do this all the time. It's why I do my top down analysis as well as bottom up. Um, but that's where I'm getting everything. All right. So perfect example, right? Industrials. Basically, we've seen this, right? Pulled down. Things did not look good because after this big uptrend, we started getting choppy and, things started tightening right around here. We saw things start to break out. We saw some trending and now we're pulling back and we're tightening up, holding above those highs. Industrials looks constructive. I'm willing to play in the industrial pool because of how this is behaving. Consumer discretionary, the opposite, right? It's very choppy. It's very sloppy. It's holding below that 200-day simple moving average. Now, if we were to start looking constructive, things would change, but right now it doesn't. Materials, same thing, right? We're seeing the big break, things kind of starting to get choppy, tried to get up above this level, rejected. Now we're starting to trade and live below that 50-day simple moving average. The same way I look at the market, this is something that's off my radar. Financials, we went over, we just kind of talked about. Utilities, kind of giving that, it broke out, rolled back down, got below 200, rallied. Now it looks like it wants to break back down again. It's, this is a sideways, choppy slash wanting to trend downward type of analysis. So I'm not looking to go in there. And real estate looking strong, a little more volatile, a little more choppy. But real estate looking and behaving perfectly normal. If it can kind of pull back, squat, and then break higher, and we see a break, then real estate's going to be really in play. This is damage. This is out of it. This is sideways and choppy consumer staples, not something I'm interested in. So again, right, I'm not looking to dive into tech right now because of what I'm seeing in the sectors, what I'm seeing in the industries, what I'm seeing in a lot of things. It almost looks like it wants to become a short, like we're going to rally and then break back down. But it could also be that we hold these lows, we tighten up, and then we rally the other direction. So it looks constructive in both ways. We're almost got no trend right now. Macro, we have an uptrend. More in the micro, we don't really have a trend until I start to see a significant move that tells me that this trend may be changing. I'm willing to put risk. It doesn't necessarily mean it's going to continue, but just like a follow through day, that signal of this is showing signs that it wants to start moving in the opposite direction, then I will, because that's part of it. And if we're looking back here, this is a little different, right? The market was in a correction type kind of thing from around here. And look what happened right on April 8th. We saw basically follow through day action. And this group, if we're looking back to that April 8th time frame, energy had already gone on. Healthcare, where's April 8th? Like it didn't really, it was kind of like, it's a little hard to explain. Technology was showing really a lot of relative strength while the market was down, and it was something that stood out. Like if I bring up, let's just do this. XLK, XLK. And then we'll be done with sectors and I'll move on for those of you getting bored with this. Look right here. Look at us, we're starting to climb. See the relative strength line starting to really show some strength? Look at right here, April 8th. It was showing some good RS. And again, the stocks in here were showing RS, so it's multifaceted. All right. Weinstein wouldn't want the bottom either. Absolutely not. His book says never buy below 200. 100,000% agree. Every one of my screens pretty much has that as a criteria to filter out stuff. Yeah, I meant more like the real rotation, cyber screws. Okay, we talked about that. Got it. Thanks for the answer. No problem. How do you keep track of which ETFs you look at? Sectors, groups. All right, so I have my sector ETFs, and then I used AI, and I spent a long time, and I don't use this as much because I've built my dashboard, but I also have, oh, I might have taken it out. Oh, okay. I also have a master list of like all these different ETFs. Or what sometimes will happen is if I'm seeing stuff that I want to start looking at, because here's the other thing you got to remember, some of these are weighted, right? So some of these are maybe heavily weighted in one or two names that may be causing it to look like the whole group's doing well, but it's not. And then some of these are a little more equal weighted or broad based, that it's a little easier. So you kind of got to, it is a little finicky. I don't use this as much as I used to now that I built my own industry group dashboard, but this is a great method, right? Solar, you can kind of take a look and see what solar is doing when you look at TAN. This is your kind of commodities. You can kind of like all these different things. iPay, this is looking at your payment ETF starting to turn around. So there's a lot of stuff you can do. Um, and I do have a Excel sheet that I could send people that kind of breaks down how this all is shown and why I have all these ETFs in here. All right, let's go into sub industry groups. And now this is what I was talking about in terms of my sub industry groups. I have my long term, which is like my pure CANSLIM style rankings, right? Where you still see memory up there. Again, long term uptrend, big leader. It's going to take a while to see this stuff rotate, but it works very good when we have a good correction. Short term, we're starting to see, right? Cybersecurity, all these, like we're starting to see cybersecurity a little weak, genomics a little weak. Like this rotates much faster. And then this is the other area that I use. On top of looking at daily, which I share with you guys in my write-ups, I look at this. This gives me a kind of a mental like, okay, hey, oh, I've seen copper miners leading today. I've seen copper miners leading last week. I've seen copper miners 2 days ago, 3 days ago. Okay, that's catching my attention. So I have lots of ways of looking at things. It's not just a black and white, like this triggers, this shows me this, because of how it is a little difficult sometimes, because it's not like things just the light goes on, the market turns around. It's a slow process of things kind of chopping, moving, just like anything else. Just like it's, the big thing I guess we're saying here is, right, bottom picking, top picking, can't do. We want to ride the trend. We want to see a trend get into place, and we want to get on board and ride the coattails, because when those trends go, and if they are true trends, these institutions take a while to build those positions. They're not as fast as us. That's why those trends are going to last. Then human psychology starts playing into it. Whereas things start trending, more buyers start to come in. So there's a lot of facets of market mechanics behind the trend analysis and behind trending of why trend following works. And there's thousands of videos and hours of all different trend followers explaining that. But that's what a lot of, when you look at most of our strategies that a lot of us trade, that's what we're doing. We're trend following. So again, we want to see the trend confirm, and then we want to be willing to put some risk into that area, because we're starting to see that trend change turn. And as the trend continues to prove itself, just like the market, just like the sectors, just like the industry groups, just like the stocks, as that trend continues to follow through and prove itself, it allows us to be more willing to see what is leading and more willing to put risk into that area. Is that list built in, or did you create it? The ETF list is my own watch list. I do have an Excel sheet of it. So email me and I will email it to you if you want it. And then you can just copy and paste those and throw them in there. All right. So actually back to what's going on in the current market, right? So we saw some strength, right, in some of these names. But to me, if we look at a lot of these names, again, the trend hasn't changed yet. It's still just sloppy, choppy, sideways action. One day isn't letting me say that, oh my God, we're great. The same way like cybersecurity getting hit. A lot of those names, and we just looked at bug, like it's not doing anything wrong after a big run up, and it's pulling back. Nothing wrong. The trend looks okay. So when I'm looking at the rankings, and I'm looking at these short-term leaders, because this is where I'm focusing right now, and this is where my eyes focus a lot in these choppier markets after we've been in a sustained uptrend. Look, we're seeing the energy stuff populate with all the news. There's some HR staffing. Cybersecurity has been pulling back and might be giving people an opportunity to get in again. Genomics, the same thing. A lot of healthcare stuff and a lot of financial stuff really populating in here. There are some software names that are also in here. And that's really where my focus has been thus far. Payment processing, another huge group to be paying attention to that's been showing a lot of strength, payment processing. Other than that, that's pretty much what I'm seeing when I look at stocks, when I look at my rankings and things like that. If I'm looking at some rapid movers, which is again another way that I get to look at things, and this is why I built this the way I built it, because it gives me a lot of different ways. These are things that are climbing quickly through the long-term rankings. So it's some of the stuff within the short term, but it's just also good to look at different, things that are starting to show weakness. You can see that all there. So you can take a pause, and if you really want to look and go through this, get a better visual of what's going on. I've been asked so many times, can I make this available to everybody? And the way I have it built right now, it's all locally hosted. If I was to start putting this out, I'd have to start paying for data providers. I'd have to start reorganizing the way this would be. It would start to accrue some costs and some stuff that I would have to do to make it available to everybody. But look, I'm not anybody that's super, super smart, and this is just what AI allows us to do nowadays with vibe coding. So, and it works for me. I basically took all my Excel sheets and coded them into a dashboard. So I'm in Discord. Did you list it there? No, but just message me and remind me, and I'll drop it in the public Discord, 100%. So just put it anywhere, industry groups, wherever you want. Just say, hey, can you send that ETF, and then I'll get it over to you, 100%. Because that's how I used to do it before I did this dashboard, and it works pretty good. All right. So like I said, right now, still keeping an eye on cyber, still keeping an eye on how financial stuff, specifically the payment processing, still keeping an eye on the healthcare stuff, watching energy as energy looks like it might want to turn around. Maybe there's a play there. And keeping an eye on some of these tech names, but not looking to pull the trigger on anything there just yet. News wise, we got nothing this week to really worry about. Earnings are starting to pick up. This is going to take a while for it to populate. So, there are some earnings. So just be aware of what is reporting. If it's anything that you own, and just knowing where some of these big names are reporting, I'll let this kind of go in the background, and then we'll jump back over. I'll show you guys so you can just take a quick look, but let's go back to Deepvue. All right. So as I always do, I'll show you where I'm at. This is what I'm talking about with cybersecurity. You can see where I got my buys on this. This is what I talked about, where I was buying on tightness, where there was a lot of relative strength in these names, good fundamentals, things turning around. I put in tight risk. Bought here as it was breaking out. Um, Bought here bouncing off the 21. And then I kind of trimmed up in here because I got very, very heavily weighted, and it kind of got rejected. Um, but now, this is what happens because I was able to pull some of this money off back up. I think I pulled it off here, right? It was Wednesday, I believe I sold some of this. So I was able to take some profits in this area. Uh, and now I have a lighter position that I'm willing to, because I got such a low entry and with tight risk, I'm willing to let this play out. I'm not concerned. And we were talking about this in Discord, right? We were talking about how everybody was talking about crowd and people that got stopped out and things like that. And that's why later in the market, I like these tighter entries. And there's pros and cons to tight entries. There's pros and cons to buying breakouts, and they work in different markets and different time periods. And that's why no strategy is perfect and works in every single market. You have to understand your approach, how it works within these market trends, and when it's great, when it works, and when it's tougher. Pure CANSLIM, amazing out of a market correction. Later stages, things getting choppy, very, very rough. Swing trading, that works as we're getting these minor pullbacks in an uptrending market and really, really good market. As things get choppy, it's not as bad as a CANSLIM style, but sometimes if the market does get on these crazy, crazy runs, the swing trader's not getting as much out of the market as a long-term position trader might be able to ride some crazy, crazy trends. And then there's everywhere in between. It's not just a black and white position trader, swing trader. There's all facets, and I consider myself a blend between the two. But again, depending on, where I got in on this stock is behaving completely normal given the market that we are in. It's still showing relative strength and it's holding the 21. If things start to change, if we start to look like we're breaking below the 21 because it has respected that, then my position on this is going to change. But for now, I am being patient. C Gone Healthcare. This is one of those healthcare plays. This is acting beautiful. This is holding up fine. This is a name that I had got in and then kind of, I'm kind of just holding. My stop is just basically being held. It's holding. It hasn't closed below that 21. It hasn't triggered stop for me. So I'm fine. I got a small position and I'm just letting it do its thing. Small position because of the market we're in. I didn't want to get too heavily weighted. XMTR in the industrial space. This has been performing very, very well. It had a strong day breaking out today. We'll see if this can kind of follow through. That's where I'm sitting at over there. All right. So bringing up, so we had these memory stocks, right? Oh, memory had really strong today. Look at this. We're below the 50. We're still trending downwards. This isn't anything to write home about. This got sloppy. This got loose. This started breaking down. This started trending. It's been up. It's been a long, long uptrend. All right. This is going to get a little harder to see. Look at the change in the character of this on the weeklies. So this bounce through and back up on the 50 with how this is behaving, it's just not something I'm looking to play. There's a difference between a pullback and a base formation, right? These are pullbacks, right? We broke out, we pulled back, rallied, pulled back, rallied. And then as we broke and things got deeper and things got wider and looser, it tells you that this isn't just a pullback. This is more likely a consolidation. Now, my gut says this is a topping action, but I don't know yet. This could completely return into a leadership at some point. I don't feel it's likely, but it can. And this is why I'm still watching these names. And I don't, on a base consolidation, I don't need to buy here. I actually like seeing some form of higher highs and higher lows or wedge pops or whatever you want to call it, trend line break, something to see that this is building up the right-hand side and then try to kind of build up on the right-hand side. But it might not get to that. So the reason why I think buying stuff like this, bouncing off the 50, and it's not a good move is because of how we are in the trend of this name, right? Stocks tend to consolidate when they're showing the leaders will tend to consolidate, break out, trend up, pull back, trend up, pull back, 1, 2, 3, however many times, and then they'll tend to base. You don't know though, is that a base or is that a top? And then if it confirms and turns around, well, then you go, because they're going to be names, right? This is a stock that I traded last year. Oops, I just moved my thing on me. That's not good. Can I Control Z that? Yes. Okay. This was a name that gave a tight flagging action. I rushed this trade. It ended up breaking out here. I didn't forget about it. It gave me a really nice gains in profit. Now here, like, we don't know. Is this a base? We don't know. That's why I'm not looking to buy as it retook the 50. I'm waiting. And it ended up rolling over. And then look what ended up happening. Now, is this going to eventually start coming back around? Maybe. But these are the things that you'll see, right? These are the things, even how Hood acted, right? Trended upwards, was really, really strong. Is this a base? We don't know. This is why you want to sometimes be a little bit more patient. And there's a lot of things you're going to have to analyze and then end up rolling over. And then we got this nice big depth. So this is just something to think about. When a stock starts trending, you're going to have pullbacks, and then you're going to either have rollovers or consolidations, which you don't really know truly what it's going to be. But there's a difference between a pullback and a basing action or a breakdown. And I think a lot of people tend to not look at the bigger context of what's going on and look at the reclaim of a 50 as an opportunity. And it's a difference between a pullback and a base buying. So you got a lot of names though, like Snow looking good. Twilio, right? This was looking good. Here's a perfect example. Trended up really well, pulled down, got tight, was showing some relative strength. I was willing, because of what the market was doing, to take a small entry, but I had a tight stop. I was able to make a little bit of profit off of this, and then I kind of pulled back some from this, I think. I forget exactly where my entries were on this, but like right now, we don't like, is this gonna pause here and reclaim and start climbing up and form a base? Is this rolling over? We don't know, but it's worth watching. But right now, this is consolidations, not pullbacks in my eyes. Sizzle. This one I'm really, really watching. This looks really, really constructive. But this, because of how strong the rally is, needs to, at the very least, I think, go sideways and flag out and digest these gains. And which is why, and we had talked about this, that if this broke out, I was not buying it. And it did break out. And this is why I didn't buy it, because look how quickly we dropped 4% here, 33% here, and then we're holding underneath. So I'd expect, even if this breaks out again, I'm not buying it. I want this to get tighter, flag out, be a little bit more constructive. And if it goes on without me, it goes on without me. Right? GEV. This looked a little more promising. It's starting to get sloppy, but still holding those things. Eli Lilly, this was kind of a pullback type of buy because it broke out of this big base for me. I put positions on here. I was able to walk away with, I think, basically break even after maybe a little bit of profit. But right, there's a difference. This is more of a pullback here because we just broke out of this big base. Versus if we were all the way up here in a big trend and we saw some big wide loose action, I'm going to look at it differently. But you got a lot of names like, look, these names, like, again, strong, a lot of strength today in some of these names. But when you look at things in the context of the move, nothing's changing in the trend, right? Nothing's changing in the trend, right? This is positive, but the likelihood we're going to skyrocket from here and it's going to be a V-shaped recovery is very small. Most likely we're going to see volatility drop and sideways action. And you can mentally note that and check me on this, but I'm telling you that's very likely what we're going to see. And if it doesn't do that, that's just not my strategy and not my risk, and not a risk I'm willing to take, right? Marvell, look, yeah, strong, good up day, right? Not worth it. Dell, there's a lot of these names that just don't look great. And that's where, okay, Rocket Lab, ready? This is something that was mentioned. What was the thing on Rocket Lab? Rocket Lab looks like a bounce support area off 64. Let me get this crap out of here. I don't need these up here. This is a loss for me. I'm going to have to mark this up later in the year better. Support at 64. So these lows. Look, see, to me, that doesn't mean support. Because we had a couple days where things got tight, I don't necessarily see that as support. If we rallied, pulled back, and bounced again, or we got up and came back and retested again and saw two points off of that, but like at what point, like, oh, support here, support here, support here, that's one data point to me, right? Just because we went down and went back up, that doesn't mean it's supporting that area necessarily to a point of technical analysis where I care. Now, you could say, right, looking at this area, maybe looking through here a little bit. So I will correct myself slightly and say if we're looking at the lows around here, they're kind of overlapping. So like it held price here, held price here. All right, I'm gonna redact, if that's the right word. I'm not that smart. Sorry, my statement, and say it does look like it's supporting this area. It supported it here before. It shook out and then it took off. It looks like it's supporting it again. But to me, that doesn't mean anything. Like, that's great. That's fine. I'm not looking to buy something below 200. It's clearly in a downtrend. Stan Weinstein stage 4. And I want to see this kind of start to make some higher highs and higher lows before I start to consider a name like this. Coco is another one brought up. So big rally, aggressive drop. This is right. We're starting to see bottomed here, created a low, we rallied, hit resistance, create a low, and now we're in this little kind of mini Darvis box right here. Yeah, so this I could see, right? If this is what you feel is worth your time, if this stock is worth your risk, and you feel because this is something to always think about, right? We're most of us being not giant hedge funds, we're only buying maybe max 10 names. Me, sometimes I try to keep it between 6 and 8 names. Even sometimes less, depending on how the market is and how heavily weighted I get into a big leader if I can catch one. So it does have this little tight action right here, and I think that's cool. And maybe if we can reclaim the 50 here, maybe you put a little bit on, and then you see if it can kind of just keep stair stepping. And then as you get to here, depending on what the market's doing, yeah, I could see Coco looking good. It's funny actually because my dog's name is Kona, and my son calls my dog because he can't say Kona, he says Coco, so it's pretty funny. RKLZ. I would not. Okay. I would not be shorting Rocket Lab here. No way. Not a chance. Look how far off of high. Look how far from the 50-day simple moving average we are. We're 40% off of the 50-day simple moving average right now. I am not shorting something this far off of the 50. I don't really short that much, but when I do, it is no way am I shorting something that far off of the 50-day simple moving average. The same way when something gets super extended to the upside, you expect something to return to the means. The same thing on the downside. And we could easily, in a high volatility name like this, what was I going to say? Who said the support with Rocket Lab? Was that Liz? Okay, Liz could be 100% right that we find support here, and I know people that will in their strategy. This is something they'd be willing to take a tight risk on. It's not my style, but we could see a 20% pop real quick on a 2x short leverage. Hell no. Hell no. I think this has more probability of rallying short term there than it does have of collapsing at this point, if I had to pick it. But again, this is just not a trade that I'm willing to take because it's probably going to be choppy. It would have been good to know a few weeks ago. Yeah, absolutely. But that's the kind of thing with shorting, right? It's shorting's a little, it's everything is hindsight's 2020 within trading, you know? But yeah, absolutely no way in hell am I shorting Rocket Lab here. You probably could have argued shorting into the 50 maybe. There's a lot of different ways. There are people right now that are looking at MU as a good short possibility. Right? There are probably people that are shorting MU today as it reclaimed the 50 with the possibility of maybe looking at today's highs as their stop, and they put a short and expecting it to break back down from here. There's a big difference between shorting something right there and shorting something down here. All right. Let's wrap this up. We're coming close to an hour. I got to eat some dinner and get ready for work. All right. So, just to summarize where we're at, look, this is a patient market. Don't want to be trading too much. Don't want high exposure levels. Swing trader, position trader, it's regardless, this is the type of market where the over trading is going to really hurt you. The choppiness is going to hurt you. The death by 1,000 cuts can easily come from this market. And this is what has damaged me many, many times in my career before I got comfortable with sitting out a little bit more. And this is what saved me in this year, especially, when things were getting really choppy. I was trading much, much less, and I avoided a lot of equity loss in those markets, and I waited for things to get really strong. And I've said this before. What tends to happen is people continue to trade. They continue to be high risk. They continue to force things in a poor market. Then they get so beat up, both equity-wise and mentally, that when the market does finally give you a good, strong signal, they're like, I've seen this before. I'm not trading and getting chopped up again because they've just gotten exhausted. And then that's the one where the market turns around and things get better. And that was the more promising move while they were trying to trade the chop fest. And when things finally got constructive and made a real significant move, showing the institutions were getting back into, getting in a bullish phase and things were starting to turn around and showing that maybe you're not going full on in, but you should start increasing exposure and hoping this market starts to follow through, the stock follows through, the industry group follows through. These people are sitting on their hands. And this literally happened. And we talked about this in the beginning of the year. And it doesn't always happen this way, but it was very, very textbook where people just kept talking about trades in the chop. And I kept saying, this isn't the market you want to be trading. This is a chop fest. You don't want to be doing this. You want to be sitting. You want to be patient. You can make a lot of profits in a very, very short time if we get a good trend, but you can really damage yourself in these type of markets. Just sit back, be patient, look at the relative strength. MU broke out, SanDisk broke out. The market was still not looking good. The market was still looking poor. And I said, the market's weighing heavy on these names. These breakouts are probably going to fail. They ended up failing. Again, it's not that they could have took off without me. But again, it's just not my trading style. I'm not worried about catching every single move. I'm worried about playing the probabilities, playing the risk. And when things are good, I'm extracting money from the market. When things are bad or things are not great, which is what it is right now, I'm being patient because I know it only takes a few months. It only takes a few big names. It only takes a couple of a good short trend like for a couple of months that you can really, really get yourself ahead and really crush the markets and outperform. So keep that all in mind. It is very hard to sit back. Most of us want to be active. I am one of those people. It's taken me a very long time to be able to sit on my hands and be patient. As you can see, I still trade a little bit. I just try to adjust my risk to make sure I've made a little bit of trading since June, and I am completely flat. My equity curve has done this. I've had winners, I've had losers, I've had just basically, but I'm good with that because I'm trading very small. I'm not trading a lot. I'm taking a little bit of profit here. I'm making a little bit of gains, then I'm losing a little bit, and I'm just trading sideways because if the market does turn around, then I'm willing to start to increase exposure. Um, so you got to really make sure that you're managing your risk. You got to make sure that you're managing your emotions and you're handling this market environment the way it really is showing. And then when things turn around, be prepared to start increasing exposure so that when we do get a strong uptrend, you're pedal to the metal and you're extracting money from the market. And when things are easy and it's an easy dollar market, when everybody thinks this is the easiest is where, yeah, everybody's making money. When markets get like this is where all those people become boom and bust traders and they give back a lot of their profits. And that's where you see people underperform the market because they can't step out. It's not, most people were making a lot of money come from April to June. It wasn't very hard. It was pretty easy. Not all those people at the end of the year are going to be having good returns for the year because they're going to be giving a lot of them back in the poor environments, or they were probably digging themselves out from the beginning of the year. So just keep all this in mind. To me, it's a big differentiator in your performance. Like I said, because easy penny markets, it's easy dollar markets. Everybody's making money. It's these markets where people are giving it back. And that's where the underperformance is really coming from. And I've experienced it firsthand many, many times. So just trust me on that. Liver has more story about Cotton in his book. He tried twice to force the trade, then gave up, had the ticker removed from his tape, and that's when it rallied. And that's what happens, right? This choppiness is very likely just exhausting people. It's chopping up those traders like ourselves. It's chopping up the position traders buying the breakouts. It's chopping up the swing traders that are maybe not, they're trying to hold for too long. It's chopping up the long-term people who maybe are sitting right now with some of these names that are 40-50% losses. And they're just like, God, just please. Oh, it's going. Oh, it's breaking down. Oh, it's going. And they get so exhausted. When the market finally gets them back to break even, they start selling. And that's where those handles come in. There's a lot of pieces to this, but, yeah, the choppiness is exhausting a lot of people, just like it was exhausting Livermore. And then just market psychology at some point when all those weak hands get exhausted and all that's left is big money buying into these names and they've just slowly extracted little bits of shares from all the weak hands, and all that's left now, there's no more sellers, and there's just the big institutional buyers. That's where we start to see things turn around on the right-hand side of the base, and that's where things start to kind of move and start to trend. And then now, once we can see that starting to happen and we can see that confirmation, that's where we want to jump on. That's where we want to start riding those coattails, because that's just the beginning. That's just the start. And these big institutions are going to be still building their position, and the names are going to start to change. And then we're going to hit all-time highs, and everybody's going to be in green. And then people start talking about it, and then people start chasing, and the trend continues and continues and continues. And then eventually the trend ends, and we go back into this cycle. So hopefully that all helps. Oh, sorry, Pete. All right, we're going to do this one quick just because Pete, I know, I've seen your name in here, but I know you're not in here all the time, and I don't want you to think I'm ignoring you. All right. Healthcare, FTRE, very, very, very constructive, big, massive, deep 54 base, building up the right-hand side, creating higher highs and higher lows, riding that 21 EMA, looking beautiful, trading very, very tightly, very, very tightly. I wouldn't be surprised if some people bought it today with being able to even pull this stop. Look, even if you pulled this stop to here, you're at 8%. If you pulled your stop 21, you're 3%. If you pulled the stop to low of the day, you're 1 point. You pulled your stop to here. Like this was today might have been an opportunity as it broke above here. Or maybe we just wait till it takes out these levels right here. Maybe wait till it gets to 1830 or 1833, and we had like 1830 level kind of looks pretty good. Good earnings, poor sales. I'm not gonna look at the fundamentals. You guys can see it on the screen. You can do that. I know not everybody trades fundamentals, but from a technical perspective, this looks beautiful. I would like to see this kind of just tighten up even a little bit more, trade a little bit more sideways. But once it breaks through these ranges right around that 834-ish area, 830, 833, that looks good. And I just love how this is trending. That's not really a good trend line. But you're getting some flagging action happening right here, right at those all-time highs. And these tops right here are pretty close to that. So that 830-ish area is somewhere to watch. But I love the tight sideways action for sure. So, all right, Charles. You guys, I can't not look at the names that you guys send me. Thin? THIN? Or thin, you're talking thin in terms of trading, because it's only a 17.91. Yeah, but I mean, I don't know about you. I'm not too worried about liquidity in a name like this personally. 1.69 billion market cap, average volume, dollar volume, 21.94 million, 51.12% ATR. It's above a $15 stock. I'm not worried about my own liquidity in a name like this. If you are, and by all means, like, you're trading a lot more money than me. Yeah. So it is a little thin, 100%. I'm not going to say it's not thin, right? There's a big difference between a name like this and a name like MU and a name like SanDisk and even a name like MXL, right? There's a big difference. It's definitely much thinner, right? Big difference in a name like this. But I think this is very constructive. I could see 100% why. It's a healthcare stock. It's very constructive. It's trending well. It's tightening up. It's a very, very low risk entry. Again, it is a thinner stock for sure. But I would personally myself not be so worried about volatility here. I'm probably not taking this trade, to be completely honest, just because of how the market is. And I don't think this is the best of the best, but I could see why, Pete, I 100% we see why you brought this up. And it looks very, very constructive, and I definitely like it. Now, look, there is a ton of resistance up here, but looking like now we've got that stage 2, and this might want to start trending upwards. So and we're above the 200, we're above the 50, we're above everything. We're right at all-time highs. So no, I'm not. I think this is a beautiful setup. Love it. Love it. All right. That's all we got, guys. Let's wrap this up. YouTube, you guys know the deal. Do me a favor, drop some comments, hit some likes. The more that you guys get in these chats, like I'm seeing some new faces in here, the more fun this is for me. The more that I learn, the more that we all get different conversations. I get to talk. The more it's just better for everybody. I know I'm a super small channel, but the likes, the comments, the subscribing, um, and when I say comments, not necessarily in the live chat, on the actual video, because these all get put up on the YouTube channel. It all helps just push this out to some more people, and we can grow the community. We have the X up there, which I do some posting on there, and then, as you guys know, Discord, where we got a solid group of over 1,000 people that are really, really, everybody's helping each other. There's people of all levels. We got professional traders in there. And that's where I'm doing a lot of my just daily random thoughts and talks and rants and question answering as well. And that's where I will send Liz. I will send you the ETF. And Liz says, remember us when you're on IBD. If I could get on IBD, that'll make my freaking year. From somebody that's been trading this style for so freaking long and has watched so much of their content. I watched their YouTube stock market today. I'll watch it later tonight religiously. I'm a huge fan of Webby. I'm a huge fan of a lot of the people out there. To get a chance to be on IBD Live or to do a podcast with them, we're going to get there. Liz, we're going to get there. And I promise you that everything's going to stay the same. The community's going to be the same. I'm going to keep doing everything I'm doing because I do love this. And we're all learning together. But we'll save this clip because if you see the smile that's on my face now, it's gonna be 20-fold when I'm on IBD, and I'm gonna have to really contain my smile just to be talking with those guys and getting the opportunity to talk there, because it's a legendary group of people, and it's a legendary company that has changed a lot of people's lives, and it's the foundation of a lot of why I do what I do, and I've learned so much from them over the years. So let's hope so. Let's keep putting this out into the world, and maybe eventually we'll make it. Or if somebody's watching this and you guys know anybody that can get me on there, I'll be I will be ecstatic. Ecstatic. I don't know if you guys can comment or do something. We could form an army of people that are saying, get me on there. Whatever. It'll be fun. All right. As usual, if you made it this far, I appreciate it. You guys make this what it is. Everybody in the chat, thank you guys. You make this fun. You make this what it is. And that's all we got for today. Stay disciplined.